Hello YouTube. Today we're going to be talking about the gaps and whether they're going to hold, because right now the S&P looks a lot more like a penny stock than it does the biggest exchange or ETF in the world. We've got 1, 2, 3, and 4 gaps. So the big question is, are we actually going to hold this lower gap area here going all the way to Friday's high at 369.38? As of right now, we're quite a bit higher. And as we look here a little bit closer, we note that we have a gap from Wednesday to Thursday, and then we got our 2 upper gaps. So the big question is, are we going to push down and fill these lower gaps, or are we going to continue to advance and get to these upper pockets here, looking for up to roughly 402 to complete the pattern here? This is very important because history for 2022 tells us that maybe we're due for a sour reaction tomorrow. Again, S&P is closing up by 2.52% today, just above 375. And what's happened every time so far this year when stocks pop this much? On average, they are down by 0.8% the next day. So as we think about that, what it pretty much tells us is that from the closing price of today at 375, if we were to decline by about 0.8, which is the average, where do we land? We would be right at the opening price for today at about 372. We're still going to have gaps in the chart, and this is going to be very notable to me. So what I would note is that we also have this big key relative low here for us to get through, and I'm going to look at that in one moment right now. So we look here to fear, and I think that this fear is pretty much on the tape. I think that post-OPEX and 3.2 trillion in notional value expiring, I think that it's a low volume, reluctant rally, and we note that here by looking at the volume. Volume is not really all that high, compared to the percent gain that we have today. For a 2.5% gain day, I would want to see the volume absolutely pumping. I do not see that. It's actually quite soft. So that's important for us. And the reason why I'm paying attention to whether or not we're going to go down or we're going to go up is because we have big catalysts for this week. So the catalyst for this week includes, again, we've had Mester and Barkin both speaking today. And what Barkin told us is that he raised his wanting to go to 75 basis points after the Michigan consumer confidence came out. So we're going to be getting that same number pre-market on Friday. And it looks like the Fed really cares about this number now. So with Powell beginning testimony tomorrow at 9:30, I'm really going to be paying attention to whether or not he's going to have a tone of hawkishness or a tone of dovishness. And remembering that he's testifying. He's not giving prepared remarks. He is not giving a press conference for the FOMC. He is going to be testifying and justifying what he has done so far. So I'm personally leaning on a little bit bearish. So that CNBC article told us that we're roughly down by about 0.8. I also see the catalyst for us to get there. And this is important because if we think about how the week is starting versus where we need to go to really start exiting this bear market, we look here at the psychology chart, and I'm noticing that a lot of this is feeling like the broader market is now actually feeling complacency, anxiety, maybe even denial. And it's really important for me because when we look over here to this 380.45 low, this is going to be that monthly chart. So let's go back to here for a moment, understand what's happening, and then we'll look and see what the updated chart tells us. So right now, we note that we have our megaphone here with the pink lines. We note that we also have our green little circle for support. We've already bounced off that. We closed above it, but now we're revisiting. So again, the saying is that history does not repeat itself, but it rhymes. And as I'm looking at this, I'm like, this doesn't really look all that great. If we can't get back above 380.54, there's a very little chance we're going to make it back above to 400, which is roughly our uptrend here. So again, with these catalysts coming in tomorrow, meaning Jerome, I think the market's going to move big time. I'm just not sure which way it's going to go. So now if we have a look at the SP500 on the monthly chart updated, we can note here that, actually looks a little bit better. Why? Well, we have this lower wick now. So the lower wick is actually showing us that we're sucking off the bottom. However, we are still below the green line or last month's low. That's very important to me. If we stall out here and can't really go much higher, is there anything else that tells us that we have to be a little bit more mindful of more downside? I would say yes. However, I'm now giving you a balanced view in terms of what would take us up and what would take us down. And now if we look here at the S&P 500 weekly chart, again, the pattern that I've been paying very close attention to is the falling wedge. So what's notable to me is that as we're getting closer here to the end of the funnel, it's kind of decision time. We're either going to bull break massively and start going higher, or we're going to break down. We're going to break all the patterns, and we're going to start waterfalling fresh. And again, I'll bring up the falling wedge pattern here so people can understand what we're looking at. Again, maybe a quick refresher. So here we note that we have a falling wedge by the red lines showing us that we're going down. then we break out, then we backtest, then we advance. And what we've done is that we had a false breakout and we came right back down. So what's really interesting here is just that we did get a breakout, but where we would have expected to find support would be right here on our inverse head and shoulders, which gets formed. Right here we have our shoulder, we have our head, and then we have our shoulder. And this area is what we lost. So now if we close this out and try to understand what happened, because we got a false breakout, and it's this low right here at about 380.54. Oh man, that same low you just mentioned? Yes. And the reason why this is important to me is because we note these big red bars here. So as we went lower, this kind of looks like it was a false breakout. We're right back inside the wedge, and we almost hit the top, and we also almost hit the bottom. So whichever way the market decides to go starting tomorrow, I think it's going to be a big one. So there we go, trying to get through this video a little bit faster today. Also want to point out that we're doing these polls every weekend now, and last week you guys were right. Basically 2/3 of people thought that we were going to go down by about 900 votes. Here we go, right? This week people think that, oh wow, right, we're about 50% down. So is retail going to be right again, or are we maybe due for a little bit of upside here? Because again, remembering that we've now had, again, excluding this week, we've had 10 out of the last 11 weeks that have been red. Finally, looking at the heat map, what is happening here, right? So Tesla had an incredible day, up 9%. Elon spoke at the Qatar Economic Forum, and I think that gave a lot of relief to people who were long the stock. We can also note that Facebook is notably red, or Meta. Otherwise, it's a bull party, and we know that there ain't no party like a bull party. One more thing to look at here to understand the motivation going into today is options, because there's going to be expiry 3 out of 4 days this week because of that holiday. So as we look forward to what happened today, where was Max Payne? Well, it's 375 for both sides. So where did we close? 375.07. What does that mean? Burnt. All of these are torched. They're worth nothing. Everything above 375, also worth nothing. So what's interesting to me is that the market makers or the option sellers appear like they are in control. And I say that because they were able to close it right at Max Payne. This is really big volume on the options chain when the share price, or the SPY, is actually quite low. I was looking at this earlier today, and what stuck out to me particularly is just the continuation all the way through to next week. So I've already laid out the bull or bear case, and when I'm looking here at the chain, I'm noticing that the strikes they're targeting is pretty much what I would already be expecting. 375 to 370 put spread, and then over here on the call side, we got 375 up here to about 380. So again, 380.54. What are these options worth? 59 cents. They get their money back only if we get back above that 380.54 by tomorrow, because this is going to be for the 22nd, which is when Jerome starts his testimony. So now looking forward to Friday, and again, Friday closing price is going to be the most important. So understanding where people are already positioned for is going to give us some clues. What do we got? We almost got the exact same thing. We got 375 puts down to 370 puts, and then we also have 375 here up to about 380. And we also even have some extra ones here up at 382. What's notable to me is just that we have this. Let's see if I can actually, okay, let's see if this works. This right here, we have the open interest at 380, or about 50,000 contracts. That's the biggest open interest we have on any strike here. So I don't know where we're going to go. All I know is that I think we're going to be closing at either 370 or 380. So now that we understand that, let's have a look at the chart and see what would actually drive us there. And I'll explain a little bit of game theory here, because again, we have 2 holes on the bottom, or 2 gaps on the bottom, and 2 gaps on the top. So what I would love to see to get bullish, because I want to get bullish for the short term, I would love to see a gap fill on both areas tomorrow, meaning we move down to 369 and then we bounce off. I'm saying that because we have to make sure that the lower areas are support. Otherwise, people like me are going to be wondering the whole time, when are the gap fills coming? And again, like I mentioned at the beginning of the video, S&P looks a lot more like a penny stock right now than it does the single biggest ETF and most important stock in the entire world. There was a dividend issued on Friday, which is also skewing things a little bit. So we have a discrepancy between SPX, SPY, and the E-mini futures. But like I said, how are we going to have confidence that if we get to 380, it's not a sell, let alone get to the the gap here at 385, or all the way up here to about 395 to 200, which is what our monthly chart needs, if we don't know what's going to happen here for support? If we don't test support, we don't know if it is support. So I would love to see a move lower and then a big bounce higher. That would be my perfect scenario. I'm not sure I'm going to get it. So what I'll be paying attention to tomorrow, like I said, is Jerome Powell is going to be talking on both Wednesday and on Thursday. So testimony begins, I believe, at about 9:30, which is right when the market opens up. I'll double check that really fast. And they usually go for like 3-4 hours. Remembering that Janet Yellen last week was the one giving testimony. Starts at 9:30. So right when the bell rings for the broader stock market to open, Jerome Powell is going to start his testimony right at 9:30. So, right, if we heard what Janet Yellen said and he's going to echo it, she said, yep, I was wrong about transitory, blah, blah, blah. She walked a lot back. So when Jerome Powell speaks, the market's going to move. I'm just not sure which way it's going to go. Final thing here is that as we look to the Friday chain, but then we look at the July one, meaning people are positioned for this week, but are they positioned for continuation all the way through to July? Because this will tell us whether or not we're either getting a false move post-OPEX or if this is actually going to be the true move. What I'm noticing here is, we've got volume and open interest here at about 380, 375, and the big ones here at about 370 with about $8 in premium. They got a big haircut today. They lost about a third of their value. And over on the call side, right, WTF bulls, where are you? If this is truly a reversal and not just a bear market dead cat bounce, why is no one buying calls? This is a yellow flag for me, not a red flag. But post Jerome tomorrow, what I really want to see is I want to see some bullish option flow because the bears are already positioned. They're buying more and the bulls are MIA. So it seems like a trap. And again, if we're going to be getting a true move lower post OPEX, what I would expect to see is for them to squeeze everyone who got assigned their shares on Friday. And again, if they're trying to smooth out those 370 puts we looked at for July and lower, well, by walking it higher today on low volume, they're able to remove a third of the premium. So that's pretty impressive. So if we look here again, where we're going to go tomorrow, we have a gap here to about 370.94. We also have a gap here to 369.38. And these are important because we actually made some pretty good progress already this week. Back above 375, we are back above the 2021 close and open, and same thing for 2021 here. So the 2020 high is 378.48. So if we now get above 379 and get above 380.5, we are looking a lot better, which means that this dead cat bounce might have some legs to it. But until then, I remain skeptical, I remain uneasy, and I'll be paying very close attention to what Jerome has to say tomorrow. If you're interested in watching more commentary, I encourage you to watch the video that will queue up here in a moment. Otherwise, thank you so much for watching, and I look forward to seeing you tomorrow. Thank you.